Welcome, everyone. This is Sherry Fredericks, and we've moved up our weekly Zoom call a little earlier because we have a special guest, and I'd like to introduce our special guest, Dedra Moon, who is up on the corner of my screen with the Moon Group. Yay! Is an accountant in Virginia Beach, Virginia, and she prides herself on making it make sense to individuals and small business owners. I'm just going to insert a personal note. I've known Dedra when she worked with Tastefully Simple, so I'm so excited that she's going to share with us her knowledge. Okay, back to what I want to say. Her firm offers a variety of services, including accounting, bookkeeping, business formation. Dedra, what is SWAM certification? SWAM.
That may be an East Coast thing, but it is a certification you can receive from the state, and there are benefits from that.
Okay. Tax planning and tax preparation services. She earned her bachelor's degree in accounting back in 1992 and her MBA in 1999. After spending 13 years in direct sales and just 10 years shy with Tastefully Simple, she has a unique knowledge of how it works and help you make it make sense. Her passion lies in taking complex business concepts and presenting them in an easy to understand format that helps you grow. Whether your needs are once a year at tax time or ongoing throughout the year, you'll find a solution within the Moon Group LLC. When she's not spending time with her beautiful family, you can find her working on her first small business guide debuting this fall, teaching her students in her tax and bookkeeping academy, and planning her next trip. Please help me give Dedra a big Dream Achievers welcome, and I'll let you take it away, and maybe the rest of you can go on mute. Thank you.
Hey, everyone. Can you guys hear me okay?
Yep.
Okay, awesome. Sherry, can I have the controls?
Yes, I'm sorry. Forgive me for not doing that. So, Angie, what do I do down here? What do I?
You're not able to share the screen or anything?
I think I have to make her an
A
administrator.
host.
Okay.
Yeah, under
So,
Click on
participant.
participants. I'm not sure.
Mhm.
And then it'll pull all the click participants, it'll pull the list up.
Oh, right.
Oh, that just says
Participants,
chat
and
there.
then because she, Dedra,
Hmm.
that's probably where it is. The Moon Company,
That just pulls up there. Gives you the
make
chat.
host, make co-host. Okay.
There you
Do you want? Yes. Now you should be able to, Dedra. Sorry about that. You should be
Okay.
able to share your screen, correct?
No worries. Yes,
Thank you.
I should be able to. Yes. Okay, let's see. Yep, I've got it. Okay, can you guys hear me okay? Yes,
Yep.
okay, awesome, thank you so much. All righty, everybody knows this guy, right? May not be our favorite, but we have to get to know him and work with him as best as possible. And so tonight we're going to talk about direct sales and Uncle Sam. All right, have you ever felt like this when you began to think about your taxes? Just slightly overwhelmed, but maybe slightly unsure of what you're doing. I get it. Do you legit wish you had paid more attention in accounting class? Ever felt like that? Yeah, I get it. All right, we get it, and we're here to help. My name is Dedra Moon, and I know your world. Why do I say that? Well, I say that because I spent 13 years in direct sales and 10 of them with our beloved Tastefully Simple. I'm sure you guys have seen this type of stage performance before, you may not be familiar with this magazine. It is long gone, I believe. And maybe you've seen some of these accolades on stage. You may have also seen some of this type of lineup with recognition, maybe some support systems, and even our beloved buckets, right? Yeah, all that should look kind of familiar to you guys. So I share these things not to impress you, but to impress upon you that I know your world. I've been there, I've done that, and I've got a couple of degrees to back up my knowledge. I do hold a bachelor's degree in accounting as well as an MBA. And again, I don't share that to impress you, but just to impress upon you that you're talking with someone who kind of understands what needs to happen. My company, the Moon Group, is a full service tax and accounting company. We are year round. I say that because very often when people hear the word taxes, they think January through April. Well, I'm here to tell you, I'm here 365, available to assist you well beyond tax season. All right. As a member of the direct sale industry, for federal income, oh, let me advance the slide. I'm sorry, you guys. Oh, more me. Oh, wow. Sherry, are you in this picture? Oh, there's Sherry. Look
I
at
see that. That's so fun.
I don't recall what year this was, Sherry, but you know, I don't remember. Do you?
I don't remember either. A couple
I
years
don't
ago.
either. Yeah, a few years ago. That's me right there. And Jill and Sherry and some other familiar faces. All right. As a member of the direct sale industry, for federal tax purposes, you are considered a small business owner. Woohoo! We love that, right? Now, I say that you're considered a small business owner. However, it is very important to determine, are you running a business or a hobby? If you're running a hobby, Uncle Sam does not allow you to deduct certain expenses. If you're running a business, you by far have many more deductions that you can take. So before we get too far into the content today, I want you to think about that. I don't want you to answer. I don't have to know the answer, but I want you to really do some soul searching and determine, are you running a business or are you in this because it's a hobby? Businesses make you money while hobbies cost you money, okay? All right, as a business owner, which is what we're going to talk about tonight. So whether you decide that you're a hobbyist or a business owner, most of my conversation tonight will be specifically directed to those who are running a business. All right, the IRS, Uncle Sam, as we lovingly call him, expects that within the first 4 years, or within 4 years in a row, you will turn a profit in your business. Profit meaning what you make versus what you spend. There should be money left over. Now, if there isn't and you have a loss, that's okay. However, you want to be very careful to remember that losses for 4 years in a row are kind of a red flag for Uncle Sam. If that happens, then it's very likely that Uncle Sam will disallow your deductions and reclassify you as a hobby. So I remember my team when I was with Tastefully Simple, And I had probably at the highest about 100 people on my team, and about 30% were my doers, about 30% were my dabblers, and in all honesty, about 30% was just kind of dead in the water. So whether you are a doer or a dabbler, you want to remember that the IRS expects you to turn a profit within the first 4 years or no loss for 4 years in a row. All right. So how does all of your business activity relate to your 1040? Now, 1040, we all know what that is, right? That's your regular tax return. We all file one, whether we file it jointly with a spouse or whether we file it single, we all file a 1040. Well, your business activity flows to what's called your Schedule C. You'll see that right here at the top of the slide. The form where you're going to record all of your tastefully simple income as well as your expenses is on Schedule C. Okay, the Schedule C then rolls to Schedule 1, if you'll notice in the left-hand corner, and Schedule 1 rolls to the 1040. So it's kind of a gradual step process, but it all begins with the Schedule C. All right. On your Schedule C, let's dig in, okay? Because this is kind of the meat and potatoes of your business activity. And as you notice at the top, it says profit or loss from business. Again, 4 losses in a row may jeopardize your business status. So we want to be very cautious of actually working the business as a business and not as a dabbler or a dead in the water. So as you notice, the top half of the form is really your basic demographic information. Where we start to get into the fun part is here on line 1. Line 1 represents your gross sales with Tastefully Simple. Now, Sherry, if you will unmute yourself and help me here for a second, because
Yep.
I believe the way that your commission is paid has changed. Am I correct?
Correct. We pay full retail when
Okay.
orders are placed, and then we get paid twice a month, depending on how much part 1 we have sold.
Okay,
So you can make 10 to 40%.
okay. And that 10 to 40% is relayed to you via a 1099 at the end of the year, correct?
Correct.
Okay, so you guys may have started to receive the 1099s this week, am I correct?
Right. I have you guys has anybody else received theirs? Yeah, I think I have mine.
Okay.
Yeah,
I'm
happy to know.
thinking you should have them within the next day or so because the IRS requires that Tastefully Simple make it available to you not later than January 31st. So if Tastefully Simple mailed them out on the 31st, we know the mail is kind of slow. So you guys should be receiving those any moment now. Okay, on your 1099, as Sherry just shared with us, you should see your commission, which would have been between 10% and 40% of the retail sales. That number on your 1099 ends up right here on line 1 of your Schedule C. Now, that number that's on your 1099, you should be able to tie that number to your back office. Sherry, can you run a report that matches what's on the 1099? I believe you can, but can you help me understand that part?
Well, I really can't help you understand that part because I'm incorporated. I'm Sherry Fredericks Inc.
Okay,
So, and my taxes are, my assistant does everything in QuickBooks.
Okay,
and we send it. So maybe someone else could speak up, Sheila, Angie.
We probably could through like an order listing, an annual order listing.
okay, yep,
And it would show it as the discount would probably be then our commission.
okay, yep, that makes perfect sense. Thank you, Angie.
Mhm.
So the number that's on the 1099 should tie to your order listing in the discount area. The fact that Tastefully Simple paid you between 10 and 40% means income to Uncle Sam. Now, keep in mind that our country, many of our social programs run off of our tax dollars. So it's important to Uncle Sam to know what money you made. So line number 1 should match what is on your order listing in the discount section, as well as what's on your 1099. Those
So-
three things are the same. Go ahead.
Question about what number one, is that the number including the all the incentive numbers?
Actually, yes, it should.
Okay.
Okay, because for instance, let's say you earned Silver Leaf. Tastefully Simple will include the value of that trip in your 1099. So if your order listing says discount was $10,000 and your 1099 says $15,000, the difference is probably trips and incentives.
Right. So,
Okay.
okay, got it. Thank you.
Again, income. Uncle Sam wants to know what is the income because that's where he gets to tax you. However, because you're running a business, not a hobby, you are eligible to take deductions. Everybody say woohoo for deductions. We love deductions, right? Absolutely. Okay, so in your order listing, you will of course be able to locate what you may have paid for samples. And maybe, I'm not sure if Tastefully Simple currently records anything other than samples, but things you buy directly from Tastefully Simple for your own use and for parties are deductible expenses. So I know when I was a Tastefully Simple consultant, I did lots of parties. I tried to party 3 or 4 times a week. And with those parties, I always had to buy my sample packs. Those are tax deductible. Those should be on your reporting from Tastefully Simple. Now, that's usually the easiest expense to identify. However, there are lots more expenses that you can take. And again, whoop whoop for expenses. Now, as we think about expenses, there are 2 words that I want you to remember because Uncle Sam will hold you to this. Those 2 words are ordinary and necessary. Your expenses have to be ordinary and necessary. Okay, so let's talk about those words, ordinary and necessary. Ordinary means that this is an expense that would ordinarily be found with this type of business. Necessary means it is necessary to have that expense for this type of business. So let me tell you a funny story. As I mentioned, I'm an accountant and I work with lots of clients all year round. So I was sitting with a client not too long ago, and he is in the healthcare industry. So he works with medical professionals and elderly people on a regular basis. So as I'm looking through his expenses, or what he proposed to be his expenses, I saw a recurring transaction for something called slippery slope. So I paused for a moment and I said, wow, slippery slope. How does this relate to his business? How is this ordinary and necessary? And in my mind, I could not rationalize that. So I called him in and asked him to come and talk to me about these particular expenses. So he was quite embarrassed with having to tell me that Slippery Slope was an exotic dancer that he liked to frequent. Well, I said, hey, I'm no prude, and I don't care how you spend your money. You just don't want to take it as an allowable expense for your healthcare company. So I say that to say this. Your expenses must be ordinary and necessary for your business, and they must stand the test of Uncle Sam. So what I mean by that is after his face went beet red and his jaw dropped to the table, once he came back from fainting, I asked him, so was that kind of uncomfortable to have to talk to me about that? And he goes, uh-huh, 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 uh-huh. And I said, so can you imagine how uncomfortable it would be to talk to your Uncle Sam? Yeah. So hopefully he's no longer using his business account to pay for Slippery Slope. Okay. All right. So let's make sure any expenses that we are planning to write off are ordinary and necessary for our type of business. If you are unsure of what's considered ordinary and necessary for your business, I encourage you to speak with a tax professional. They will be able to help you and kind of handhold you through this entire process. Trust me, they will not be okay with you deducting expenses to Slippery Slope. They're not gonna like that. All right, let's see. This page that we're looking at is from your Schedule C. As I mentioned, all of your income and expenses roll through your Schedule C. Here on Schedule C, this is the middle part of the form. And as you can see, the IRS has already given you most of your basic expenses. Now, this list is not all inclusive. If you have something outside of this list, it can certainly still be deducted if it's ordinary and necessary, but this just kind of gives you the most popular expenses for most businesses. Now, I remember very clearly from my time with Tastefully Simple, I did a lot of driving to and from parties, to and from vendor events, to and from team meetings, to and from Office Depot to make copies. I just did quite a bit of driving with Tastefully Simple. Now, I know things have changed because of the pandemic, and maybe you're doing more online or maybe more catalog parties. However, I want you to make sure that you are tracking your mileage. If you didn't do it for 22, it would really be to your benefit to try to recreate it. So what I mean by that is the IRS allows you upwards of 62 cents per mile as a deduction. Now, I know that 62 cents doesn't sound like a huge number. However, when you multiply 62 cents by possibly 10,000 miles, that's a really sweet deduction, you guys, that you don't want to walk away from. So let's say you did not track your mileage in 22, and you're sitting there thinking to yourself, this lady is telling me that mileage is a sweet deduction and I have no mileage. I'm going to encourage you to go back and recreate your miles. And when I say recreate, I'm sure we all have a planner of some sort, whether it's electronic or old school on paper. We all probably have a planner. So I actually want you to go back to January of 22 and retrace your steps. Where were you that month? Was there a team meeting that you went to at Sherry's place? Was there a team luncheon that you went to at the local steakhouse? Did you actually conduct 3 parties in person? I want you to recreate all of your activity, and then I want you to track your mileage from your home round trip. Yeah, it might require a little work, you guys, but I'm telling you, the deduction is sweet. You don't want to walk away from that one. Okay, so we talked about mileage, but I also want to talk about just overall car expenses. You can deduct one or the other, okay? Some people love to do the actual expenses. In my 25 years of accounting, mileage is usually the better deduction. So when I say actual car expenses, I mean things like your oil changes, your new wiper blades, your new tires, your car washes, every expense that you made for your car. If you kept up with those actual expenses, you can take that instead of mileage. In my opinion, mileage is usually better. And even if you have to recreate, mileage is easier to recreate. What I mean by that is that if you have car and truck actual expenses that you want to take, you want to make sure you have physical receipts for those expenses. Okay, so you might be thinking, well, gosh, I drive an F-150 and it was $1,000 to put 4 tires on back in January 22. Okay, do you have the receipt for those tires? And then when you add up all of your other actual expenses, do you have receipts to support them? Every time you went to the local BP, every time that you went through the car wash, do you have the receipt to back that up? Now, when I start mentioning receipts, I always like to mention that receipts are required. And when I say receipts, I do not mean your bank statements. Some people think, oh, well, I use my debit card, I can just pull out my bank statement. Unfortunately, that does not meet the burden for Uncle Sam. Uncle Sam wants to see the actual receipt. So if you have receipts and you think your actual expenses are to your benefit, by all means. If you don't have your receipts, at least recreate your mileage so that you don't miss out on a sweet deduction. All right, so have I beat that horse enough, you guys? Have I beat it enough? I'm not ashamed of beating it because it's so sweet that I don't want you guys to miss it. All right, another very sweet deduction that oftentimes people miss is business use of your home. Okay, now this one can get a little tricky, but here's what I want you to remember. If there is any place in your home that you use exclusively for business, then you have a potential deduction on your hand. All right, so I know that you guys do Tastefully Simple and you spend a lot of time in the kitchen and at the dining room table. Unfortunately, because those rooms are used for other things in your family, those aren't the business rooms that I'm referring to. I see on this Zoom, Sherry appears to be in her home office. Is that correct, Sherry? It is.
Yes, it is.
Okay, so Sherry, when you go in that room, are you working your Tastefully Simple business?
Yeah, yes, it is my home office, and I've never deducted it, Dedra, because I've always told it was a red flag. So in my almost 25 years, I haven't always had this home office, but
Okay,
I've had it for at least 20 when we built the house. Yeah, so I'm curious on your thoughts on that, but no, I've never used it as a deduction.
okay, so it is a red flag. However, you are well within your right to take the deduction. And if you have the support, then who cares about the red flag? So here's what I share with my clients. First and foremost, make sure that you use that space exclusively for business. So again, it can't be your kitchen because we know your kids are going there and make cereal. Your husband goes in there and does not do the dishes, and your teenager acts like the dishwasher loads itself. I get it. So it can't be the kitchen. However, if you have a second bedroom that you don't use for anybody else, absolutely you can and should take that deduction. Because here's why. So let's take Sherry's home, for example. Let's say Sherry's office is 300 square feet and her home is 3,000 square feet. 300 divided by 3,000 gives us 10%. That means that Sherry can take 10% of every household expense. Let's talk about heat. Yep, right off 10%. Let's talk about lights, the electricity, right off 10%. Let's talk about trash pickup, right off 10%. Lawn care, right off 10%. Snow removal, right off 10%. Alarm system, right off 10%. Internet, right off 10%. Cable, right off 10%. Again, you guys, this is such a sweet deduction that you do not want to miss it. Even though it can be a red flag, if you've got your ducks in a row, screw the red flag. Get your deductions, girl, get your deductions. So what I tell my clients to do is to actually take a picture of your workspace, tuck it away, so that if Uncle Sam ever comes calling, you can just whip out that picture and go, here you go. This is where I do my work. This is why I took the deduction. It's that simple, you guys. As long as you have a place in your home that you use exclusively for business, you can take the deduction. All right, did I beat that one up enough? I want to make sure you guys know how sweet these are because they can really make a difference on your bottom line on your tax return. All right, let's do this one. How many of you have paid any taxes on your supplies for Tastefully Simple? Yeah. Did you know that you can write off what you spent on taxes on your supplies? You absolutely can. So I want you guys to understand how important it is to know what is ordinary and necessary for your business, and then have a way to track that throughout the year. What I find is that people understand the expenses, but they don't track them. So at the end of the year, or this time, tax time, there are thousands of receipts all over the place. They don't know what to do with it, and they throw their hands up and just say, forget it. I don't want you guys to do that. Even if you did it in the past, now you know better, so you must do better. So for 23, you want to begin to track those expenses. Now, certainly, I would hope that you guys have a separate business bank account. That will be your lifesaver, you guys. And you might be thinking, well, I don't have a whole lot of money to put into a business bank account. Well, I'm going to encourage you to start with just $100. Put $100 in your business bank account and use that for all of your Tastefully Simple transactions. It will allow you to keep everything in one place, and it will allow you to have separate management of your funds. This is very important because Uncle Sam, y'all know that guy, Uncle Sam does not like what's called co-mingling. Co-mingling, I'm sorry? Somebody must be commingling because I said that word and somebody said, oh, that's sweet. Okay, so commingling is when you are having business expenses and personal expenses in the very same account. Uncle Sam doesn't like that because, as you recall, I mentioned, are you running a business or a hobby? Uncle Sam expects if you're running a business will have a separate bank account. Now, keep in mind, it doesn't necessarily have to be a business bank account. It can just be a separate checking account. Get one of the super savers for $5 a month or less and use that for your business income and expenses. All right. There's one more deduction that I want to talk about, and this one is super sweet, you guys. All right, who on the call, and I can't see everybody, but Sherry, maybe you can tell me, who on the call has children under the age of 16? All right, Desiree, I see your hand. Okay, so how much help do your children give you? I remember my children used to pack my bag. They used to take it out to the car. When I came home from a party, they had to get my black trays and wash and sanitize them. They even had to put labels on my catalogs. Do your children who are 16 and under help you with those type of transactions? Do they do that?
Well, your children sound like saints.
Okay, well, here's how you can make this work. I am a boy mom, okay? So I only have boy children. Now, I assure you, boys don't want to do the dishes. Boys do not want to stick labels on catalogs. But you know what boys do want? They want the latest NBA video game from PlayStation. They want the newest Air Jordans. Yeah, that's what boys want. So here's how you make this work. Your son could absolutely help you in your business by packing your bag, unpacking your bag, sticking labels on the catalog, you know, even inputting orders on the laptop. And you can pay him for those services. Okay, so here's how it works. What is it? 2K22 or something like that. The EA Sports. Back in my kids' day, it was like 2K15 or something. Whatever it is. It costs about $75 for one video game. Okay, well, you tell your son he needs to put in 2 hours worth of work helping you in your tastefully simple business. Then when you give him the $75 for the video game, you can deduct that as wages. And here's the even better part, you guys. For kids up to 16, you can pay them up to $12,500 per year. Yeah. And the even better part is they don't have to file. They don't have to file. You can still claim them, but you've now written off $12,500. Oh yeah, it's sweet, baby. It's very sweet. Okay, I see some faces and some wheels turning like, say what? I've been missing out on this deduction. Say what?
Dedra, I think Desiree's the youngest of us all. I think the rest of us are all.
Okay. Well, listen, if I can help one person not have to overpay Uncle Sam, it will be time well spent.
That's right. I agree.
So whether this is your situation or not, or maybe some of your new team members, because I know you guys are always bringing team members on, correct? Correct, you absolutely should be. So whether it's for you or for your newest team member, that one is a very well-kept secret, but man, it packs a punch, you guys. Talk to your tax professional. If you don't have one, you can work with me. I can work with everybody in the country. I am able to work in all states. So if you don't remember anything I shared with you, then I remember that those little rugrats that we love so much, and sometimes we don't love that much, those little rugrats can be a hidden $12,000 deduction that you do not want to miss. All right, so let me wrap up this schedule. Schedule C, your expenses. These are the things you want to make sure that you're taking, either your mileage or your actual car and truck expenses. It's so important, you guys. It is so sweet. It will blow your mind when you see those numbers. You also want to make sure you take the home office use of your business use of your home expenses. Again, you want to do the ratio. How much dedicated space do you have versus your total space for your home? That percentage can then be written off for all of your household expenses. I mean, can you imagine? I know we all probably binge watch something on Netflix. You can get a 10% deduction for your Netflix bill. Okay, so make sure that you have a dedicated space. Take a picture of your dedicated space and then use that percentage for all of your household expenses. Make sure that you're taking your taxes that you pay to Tastefully Simple, and then make sure you put those little rugrats to work and then take the deduction for that. All right, let's roll on, you guys. Any questions there before we go, you guys? Are we good there? Did I beat that one enough?
This is Barbara. I have one quick question.
Yes,
Can you put grandchildren and nieces and nephews to work?
if you're going to claim them as a deduction.
Okay,
Okay,
thanks.
let's roll on. Okay, so let's talk about some best business practices. I touched on them, but they're so important to make these deductions work. Separate bank account. Don't be slippery slope, okay? Don't be slippery slope. Open up a basic checking account at your bank and make sure you're using it solely for Tastefully Simple. If you start commingling, that's when we potentially can get in trouble with Uncle Sam. So separate bank account for your business income and expenses. Manage your receipts. Okay, you guys. Now, I know that I look like an infant. I know that I have such a young face, but I'm old. I am over 50, and that means I am old school. I like paper. I like paper. I am not the greatest with technology, all these apps and all that kind of stuff. I can take it or leave it. But whether you are collecting paper receipts or you're using an app, you want to make sure that you manage your receipts, because everything that we take on the Schedule C as an expense is subject to audit. Now, when I say the word audit, I don't want anybody freaking out. I don't want you panicking, because audits should not scare you. You know why? Because you should only be taking deductions that you're eligible for. And then if you have your receipts to support it, Who cares about the audit? So whether you're managing your receipts with paper receipts or some type of app or software, you want to make sure you keep up with your receipts because that supports the expense on your Schedule C. All right. Who on this call is as old as I am, because I'm pretty old, and you remember the envelope system? Okay, okay, Sherry, my sister. All right, Barb, my sister. Okay. So if nothing else, you guys, if you can't do anything else, every month, grab an envelope and put the month on it. So right now we're in February 23. Everything you spend for your Tastefully Simple business, get a receipt and put it in the envelope. If you can't do anything else, at least do that because those are going to be deductions that you want to take on your Schedule C, and you always want to have those available for audit. Now, just so you know, the IRS can audit you anywhere from 3 to 5 years. So imagine this, we're having this talk today, and thank you guys for coming to my TED Talk. It's the Dedra Talk, but you know, that's neither here nor there. Okay, so we're having this conversation today, and you are fired up. And all February, you keep up with your receipts. You do it diligently. And then in March, you slack off a little bit. And then April, you slack off a little bit. And then in May, Sherry kicks your butt and says, are you keeping those receipts? And you do it in May. And then June, it's hot outside and you're loving going out in the sun and you forget all about it. Okay. Well, again, Uncle Sam can audit us for 3 to 5 years. So what you do in 23 and then write off on your taxes could be subject to audit all the way through 26. Okay, so if you use the envelope system, put a month on it, stick the receipts in there and tuck them away somewhere that you have access to them if Uncle Sam ever comes calling. All right. All right, so let's talk about the liquid gold one more time. Liquid gold is your mileage, you guys. Again, for you young people, Desiree, maybe, Angie, maybe, Sandy, maybe. For you young people, you probably love apps. You love your iPhone or your Android, you love apps. Well, on your phone, there are lots of apps you can use to track your mileage. And again, you guys, this one is liquid gold. So even if you didn't do it in 22, even though I'm telling you to go back and retrace your steps, for 23, make sure today, tomorrow, you make it a habit of tracking your mileage, whether it's pen and paper or whether it's with an app. This one is liquid gold, you guys. Don't let it get past you. All right. Okay, so I've been talking nonstop for about 45 minutes. So I want to give you guys an opportunity, if you have any questions, to shout them out now. I want to make sure that I give you a chance to ask your specific questions. So does anybody have anything?
This is Barb again.
Yeah.
If you take a storage room and break it into 3 parts, 1 part storage, 1 part cat world, and 1 part Tastefully Simple, can you take this footage of 1/3 of the room?
You can, Barb. Yep, you can.
Okay, nobody's sleeping in it. Nobody's doing anything else in it. It's just storage, cat, and Tastefully Simple.
Yep, you absolutely can. Again, you want to take your picture.
Yep.
And you want to make sure that you're comfortable if you have to sit before Uncle Sam. I use that as a benchmark because Slippery Slope was not comfortable sitting in front of Uncle Sam. Okay,
Yeah,
so I just
got it.
want to make sure that you're comfortable with having to support those expenses. And usually with a picture, you're good to go.
One more question on that same topic.
Yep.
My daughter is an adult and she's also in Tastefully Simple. She has a different section of the house, like another whole half of the house.
Mhm.
Can she take a deduction for her space that she's got stuff?
Yes, absolutely.
Okay, thank you.
Okay, you're welcome. All right, what else? What other questions do you have?
Dedra, I often have consultants that really don't do much. I would consider it a hobby. Remind us what the definition is in today's world. I thought it used to be if you sold less than $5,000 or received less than 600 in leadership, it was really a hobby. And then technically, you don't have to show it as a business because it is a hobby. What's the latest, greatest on that?
Okay, those numbers are still consistent. However, I want to make sure we're clear that Uncle Sam says any income is potentially taxable. So I don't want anybody to think, oh, I only made $3,000. I don't have to report it. You do have to report it. However, you may not be able to take the expenses because at 3,000, it may just be a hobby for you. So therefore, you're not eligible for business deductions. So those amounts are still valid. However, just remember, if you're working this as a business, you can take the expenses. If it's truly a hobby, you cannot. And again, if Uncle Sam were to question you, he would want to know if it's a business and you only sold 3,000 for the whole year, what were you doing to work it as a business? Now, if you can demonstrate to Uncle Sam that you did 3 vendor events every single month and your total sales were really only 3,000, well, then you're working it as a business, you're just not having much success. But if you were to tell Uncle Sam, yeah, I did 1 vendor event in the winter and 1 vendor event in the summer, and I purchased stuff for my own consumption, you're running a hobby, not a business.
Thank you.
Okay.
I have a question, Dee Dee. What's the best way
Yeah.
to classify fundraisers? Like the amount that you give to the charity?
Charitable contribution.
But the only thing is, now we don't get to do much unless you itemize. So is it allowable to do that as like an expense, a marketing expense?
Yes, you can take that
Okay.
on your
That's what I've
schedule
kinda-
fee. Yep,
Okay.
okay. All right. Any other questions for me?
Can I ask one more? Sorry.
Sure.
We don't really have a cost of goods sold since we're getting a 1099, right?
Correct.
Okay.
All right. Okay, you guys, so we are right at about 7:25 your time, I believe. And I want to be very conscious of your time and make sure I don't go over. So let's look at the chat just to see if there are any questions we didn't answer. Okay, Barb says, having a Facebook VIP group that you use all year, does that work to show you're working as a business? Barb, I'd say yes, but however, I'd be very careful because if your group only consists of you posting on Facebook, maybe scheduling posts, I would think Uncle Sam might classify that as a hobby. If you could show in your group where you are doing a Facebook party maybe once a quarter, you are regularly posting sales, regularly trying to get orders, yes. But if it's genuinely just a fun group where you invite people just to chit chat, that's more hobby. It has to be deliberate, and intentional to generate revenue. Okay, looks like they got it for you, Barb. All right, so you guys, if I can give you any words of wisdom, it is to work with a professional if this is confusing or overwhelming for you. I say that because you don't want to miss your deductions because you're overwhelmed or just don't know what to do. You don't want to miss out on legal deductions that can keep money in your pocket. I am all for paying Uncle Sam his fair share, but not a penny more. All right. Thank you guys so much for having me. If there is nothing else, I will encourage you to check me out on Facebook, Instagram. I think I'm on Twitter and TikTok. I generally post some great tidbits for you to take away. And if you'd like to work with me and the Moon Group on your taxes now or going forward, please feel free to reach out. I'm here to help. Our motto is we make it make sense.
Excellent, Dedra. Thank you so much.
You're very welcome. Thanks for having me, Sherry.
Too bad. Good to see your smiling face.
Indeed. Many of you may not know, but I experienced a very serious illness. Uh-oh, I don't know what's going on with my camera there. I experienced a very serious illness where I was hospitalized for 7 months. I have recovered quite a bit, but I do still use a wheelchair. And my hands, I'm not able to make a fist anymore. This is as far as my hands go. But I'm here, I'm thankful, and I appreciate you guys spending an hour with me.
Thanks,
Thank
Dedra.
you. Thank you so much.
All
you
right,
so
guys,
much.
have a
Appreciate
good
you.
evening.